Mitch on the Markets, a conversation about the issues and trends affecting investors with Mitch Zacks, Senior Portfolio Manager at Zacks Investment Management. Mitch, since we talked last, there's been a real mixed bag of news that's hit the stock market, affected stocks in a variety of different ways. Mm-hmm. So the question now, as we get closer to November, is on the heels of all that news, are we going to see any kind of an election rally?
Well, I think right now the market is discounting a potential Democratic administration. And if there is a surprise on the election front, I think it would cause the market to pop a little bit. But I think what we're seeing in the market over the last couple of trading sessions shows the very, very importance of diversification and of not chasing returns. People who have been hit the hardest over the last 8-9 months are people who lost money about midway through the year, then said, I'm going to switch and chase oil. I'm going to switch and chase energy. I'm going to switch and chase international stocks. And then what happened is the things that have been hit the most have been rebounding, and the things that had not been hit, such as oil, energy stocks, international exposure, emerging market exposure, have started to become hit much more. So it's the importance, I think what we can see from the last couple of trading sessions is it's extremely important to make an allocation and stay with it throughout market fluctuations, and not to change that allocation based on price movement. If you start getting nervous and chasing price movement, saying what we're doing, I'm generating negative returns, and maybe being the S&P, I want to generate positive returns, look, oil's up 20%. Let me move into oil, and then oil gets hit. And this is par for the course for investing. You really have to create a diversified portfolio and stay diversified over a full market cycle, which is in the order of years, not the order of months or weeks.
So when we get into environments like we're in right now, where so many different elements can impact the market on a daily basis, sometimes on an hourly basis, does the market then just kind of pull back and refocus on fundamentals?
Right now, fundamentals are not the focus of the market. Right now, the market is really trading on macroeconomic news. Investors are coming into work in the morning. They're saying, are oil prices up or down? If oil prices are down, let's buy retailers, even if those retailers are having deteriorating fundamentals, in anticipation that lower gas prices will lead to more consumer spending. So right now, we're in a point of the market where they're not really focusing on individual company fundamentals. They're focusing on macroeconomic fundamentals, and these macroeconomic fundamentals are shift very, very quickly. I expect this to settle down, and as this has happened previously, there's always a movement back to stock fundamentals. At the end of the day, if a company reports earnings that are good and grows its earnings over time, its stock price goes up. This period is going to be absolutely no exception.
What about the S&P 500? It's been kind of range-bound here for a while. Is that maybe some of the reason of why there's a lot of investors still waiting on the sidelines?
Yeah, investors are waiting on the sidelines because it's not clear whether the economic pullback is going to go worldwide and really become much, much greater. I don't think it will be. As I've said several times, I didn't think we would have a technical definition of a recession in the United States. We haven't. We've had a very much a slowing period, but we have not had quarter-to-quarter, back-to-back negative GDP growth, and I expect that this current pullback absolutely represents a buying opportunity for investors who have a 3 to 5 year time horizon, essentially.
What about the decline in oil? Is that helping to stoke the recession fears?
Well, it's interesting. A couple weeks ago, Terry, we were talking about this, and oil was a big problem.
Right.
And I did say at that point in time, I am concerned that if oil prices keep going up, it's going to put downward pressure on the market. With oil prices coming down, I'm not that concerned about it. You want lower oil prices. Nothing good comes of high oil prices. It creates a wealth transfer out of the United States. It creates a tax on consumers. Lower oil prices helps to jumpstart the economy and is very, very bullish for the market going forward.
Mitch Zacks, Senior Portfolio Manager at Zacks Investment Management. With Mitch, I'm Terry Ruffalo.